Morning all, welcome to the latest desk video. It's been a volatile week and a couple of big things I just want to talk about today. Firstly, the volatility in the iron ore price, which has really come out of a lot of issues out of China, particularly the, issues with a property development company called Evergrande over in China, which is a $300 billion company. I've included some summary attached to this video below from a well-reputed fund manager here in Australia called Dalton Nickel-Reid, which is a good summary of the situation. It's a good summary of the outlook and certainly something we agree with the view that we believe the Chinese government will deal with it. However, in the short term, it is causing some volatility. It's particularly worthy of note to say that 35 to 40% of all steel demand in China comes from the property market. So that if the property market slows in any way, shape or form over there, we have the knock-on effect to the steel market, which is why we're seeing the iron ore price fall from $220 a tonne to $90 a tonne recently, which has caused the downward trend in BHP, Fortescue and Rio Tinto shares. So have a read of that. Certainly we think it will cause short-term volatility, but not have a massive long-term impact. Other things to note, Transurban, for those of you that have Transurban shares, watch your emails because there's a rights issue on at the moment for them, and we're recommending clients take it up. The other things to note this week, and it's probably for clients that have heard me use the phrase Tina, there is no alternative. That's alive and well still. And the big issue there is, or the big theme that's playing out is the super funds such as Host Plus and Australian Super, and the other big super funds are getting tens of millions, hundreds of millions of dollars of cash thrown at them through just normal super contributions and normal earnings, and they don't know what to do with the money. And so recently we've seen Sydney airports taken over by a conglomerate of super funds. We've seen this week an infrastructure company called Ausgrid being bid for. We've seen the pub company ALE bid for by Host Plus in conjunction with another private equity player, and so on. So I think that theme of infrastructure buyouts is still going to continue, or what I would call great predictable income stream type companies is going to continue, which is reflective of the super funds view or investment view that interest rates are going to stay very, very low for a very, very long period of time, and therefore getting an income growth return out of the fixed interest or bond market is going to be very, very challenging. And so they're looking at infrastructure as an increasingly important asset class to go get that return, which probably for clients, is really important to note. So stocks that we still like, Magellan Infrastructure, which invests in a broad range of infrastructure companies around the world. Still good quality infrastructure is going to be a really good place to be in a, low risk, low return, but good return, predictable point of view. It won't shoot the lights out, but I think it's a good place to be. Volatility this week, don't panic. I think it's still going to be around for the next few months. The economic data coming out of Australia is going to be pretty ordinary for the next few months. But hopefully by Christmas time or late November, we're going to see borders open up. Certainly the experience out of the UK and the US is the economy does return to some sort of normalcy. COVID's still around and everyone's getting it, but people people start to deal with it in a different way. So if you've got any questions on today's note, make sure you read that bit about the Chinese property market below, and look forward to talking to you soon. Thanks.